Welcome to the Crypto on the Block radio show, featuring industry pioneers and CEOs across various industries in blockchain and cryptocurrency. Here's your host, Matthew Loughran.
Hello, everyone, and welcome back to another show of Crypto on the Block. Again, your host here, Matthew Loughran. Today on the show, we have Thomas Zaccagnino. He's the founder of Muirfield Investment Partners. Muirfield Investment Partners was founded in 2012 and headquartered in Boston, Massachusetts. It's a private equity real estate company that recognizes the demand for innovation in the private equity and real estate product offerings. Mr. Zaccagnino is a founder and managing member of Muirfield Investment Partners. And prior to finding Muirfield, Mr. Zaccagnino was also co-managing director of Wesley Advisors Corporation, an institutional private equity real estate investment firm that directly developed, owned, and operated real estate assets and managed commingled discretionary private equity funds on behalf of tax-exempt pension fund investors. Tom, a pleasure to have you on the show today. Thanks for joining us. Would love to hear a little bit more about yourself, your background, as well as Muirfield Investment Partners.
Great. Thanks, Matt. It's a pleasure to be here as well. Thanks for having me. Again, my name is Tom Zaccagnino. I'm the founder of Muirfield Investment Partners, a private equity real estate investment company located in Boston, Mass. And by way of background, right out of college, I moved up to Boston to begin my professional career in technology, working for a tech company on the MIT campus. It was a very entrepreneurial place, 100% sink or swim. We essentially started several tech companies a year, mostly in the technology services arena, like custom application development, back-end system integration, all using, at the time, cutting-edge internet-based technologies, either that were developed in-house or were available off the shelf. It was quite a fascinating place to work, and it was certainly a crazy and amazing time to begin my career. This was, if you remember, right at the time when Amazon was formed and started to destroy the traditional brick and mortar book retailers, as an example of what was going on during that period of time. And you know, during this part of my career, I gained a huge appreciation for just how disruptive technology could be to traditional businesses. When I left tech and started investing in and developing real estate, I never forgot the lessons that I learned about the disruptive nature of technology and the amazing opportunities it presented for many, and the absolute havoc it caused for others. So at Muirfield, you know, we've been a fairly traditional private equity real estate company. We're always, you know, of course, trying to figure out how to get better and always looking for what's going on in other industries that may have an impact on our business. And we've been, you know, tracking the blockchain and cryptocurrency movement for some time now, and really intensely over the past 18 months or so, trying to learn and absorb as much as we can to better understand how this technology might present opportunities for us in our business, and specifically with our relationships with the investors that we manage money for. We ultimately decided that the opportunity blockchain technology presents for our industry is significant, and rather than be a passive recipient of other people's efforts, we wanted to be part of a group, you know, that was driving the changes and being viewed as thought leaders. You know, we have a saying in the office that we always prefer to eat our own lunch. So, you know, in keeping with that, we wanted to be on the forefront of this adoption of the technology within our industry. We recognize that, you know, what we're doing is initially is taking a small step in this effort, but we feel it's a measured and appropriate step, and you know, we're committed to continuing to drive more innovation within the community as we go. For us, it's a very exciting time, and we're looking forward to what the future holds for blockchain and its application within our industry, and for being part of the driving force behind its adoption.
Yeah, I think you mentioned a couple of great things there, right? You know, first off, I'm a student of innovation myself. So, you know, Clay Christensen's Innovator's Dilemma, you know, published in 95, I think, you know, still should be read by every single person that does anything in technology today. And what we really look at when we're talking about disruptive technologies is really the ability for organizations to come in, right, find a niche, right, find a problem, find a specific gap, and kind of leverage that through, the added abilities of different technology. Now, with that kind of concept, I mean, what do you see is maybe the biggest problem within your industry? Or do you think there's a gap in a market that Muirfield is looking to fill?
Yeah, it's a great question. I think it's actually, for us, it's a bit of both. So, for example, a major issue in the private equity space is that private equity investment vehicles traditionally are fairly constrained. And what I mean by that is, funds typically have rigid investment periods, which is, the time frame in which investments can be made, and then harvest periods, which are the time frames that investments can be exited or must be exited. These restrictions are written into the fund documents, and with little exception, have to be adhered to by the fund manager. So these types of constraints exist because of the way investors and investment managers derive economic benefit from these investment vehicles. Both generate economic benefit when the assets are all sold and the fund closes. The reason for this is specifically because the equity interests in the funds are highly illiquid. So the investor has no ability to trade its ownership interest in the fund and has to wait until the fund closes in order to realize its full economic benefit of having invested in the fund. However, given the technology we have, by tokenizing a private equity fund, we're now able to create a more liquid investment, and investors can derive economic benefit through, the buying, holding, and selling of the tokens versus being tied up for, 5, 7, 10 years or so. And as a result, the investment manager can now maximize the value or the return of each asset without regard for, artificially imposed investment or harvest terms, which in today's model could force the sale of an asset in in very bad market conditions, potentially resulting in losses for the investors. So by tokenizing the fund, we can create a liquid investment, from a highly illiquid asset such as real estate, and enable fund managers to be more thoughtful and to maximize the value of each investment, which in turn is better for both the investors and the investment manager by way of generating profits. So we're very excited about, our new structure and how it can benefit investors and managers alike. And on the other hand, you mentioned gaps in the market. We also think that we're filling an important gap. If you look at, today's situation, where crypto investors have created a tremendous amount of wealth in a very short time, and as they look to balance their crypto portfolio, the diversification of investment opportunities has lagged considerably to the wealth creation that they've experienced. So we believe that we're entering a period of what I call normalization of that opportunity set. Investors need diverse selections of investment opportunities to choose from, not just the high risk, high return potential and generally low probability opportunities that largely exist today. Of course, outside the blockchain and crypto community, crypto investors have a normalized set of traditional investment opportunities to consider. However, with the blockchain and crypto community, there are very few. Within that community, there are very few investment opportunities at the lower end of the risk spectrum. So we established our fund to present crypto investors with a lower risk, less volatile investment option that's backed by relatively stable assets, while giving them the ability to essentially keep their capital invested in the blockchain community. And that's something that we've heard from people time and time again who are active in crypto investing, is that they don't want to pull their money out into fiat. They want to keep it in crypto, and they want to be able to deploy that capital, broadly speaking, within the community to help the pace of innovation, drive the pace of innovation, and really increase the rate of adoption of blockchain technologies. It's the rising tide lifts all boats theory. So they're committed to advancing the community, and we feel that there is a gap of investment opportunities for them to consider that accomplishes that goal while helping them diversify the wealth that's been created in the last few years.
You made some really interesting points right there. And one thing I want to have you maybe go back through is the current rigid process in the private equity world. I guess personally, I don't come from the private equity markets, right? So I'm kind of wanting to understand again, kind of how rigid that could be. You said it could be, we're investing into this fund, for example. It could be 5, 7, 10 years before that investment is able to be liquidated. And I think what you mentioned as well is they might be forced to liquidate an asset in an unfavorable market, which is not going to give somebody the most favorable return. Can you maybe again contrast that specifics against kind of what you're doing with the tokenization of a fund? I think that's a really important point. I want to make sure people understand that.
Yeah, absolutely. So again, as you mentioned, current investment vehicles, the funds that private equity, the private equity structures today, essentially have defined periods of time where the investment manager can make investments, and then the investment manager has to harvest those investments, sell them, and then wind down the fund. And there are extension provisions that are included in that. But essentially, you take away the ability for the fund manager to completely optimize and drive the most value for specific assets, because you have these time constraints. And essentially, the only way the investor makes money is by the ultimate winding down of that vehicle. So all the assets have to be disposed of. You harvest the returns, and then you distribute everything at the end of that term. And most of your private equity vehicles today tend to be in the 5, 7, 10-year term period. And during that period of time, the investor has virtually no flexibility on liquidating their position, or if they're liquidating at a discount. There's no true liquidity to their interest in that fund. And what we're trying to accomplish is essentially reinventing the typical private equity structure so that we can remove those time constraints. And what we can do as fund managers is focus on growing the net asset value of the portfolio over time. So as we exit investments, we're exiting them at what we feel to be the most ideal time to maximize value for that investment. And then we're capturing that the invested capital and the profit that's associated with it, and then reinvesting in other assets. And so we're constantly trying to grow that net asset value. On the investor side, from the very beginning, they've got now a liquid asset, the token that they're able to trade on the secondary market, so they can determine how much appreciation they want to capture and when. And that's something that, again, hasn't been able to be done in opportunistic private equity type investment vehicles to date, because the technology to securitize through the issuance of tokens has not existed. And so we're fortunate enough to have that technology today. And we think that by bringing that to the private equity space, or maybe better put, bringing private equity to the blockchain community, we're able to optimize the investment structure, remove some constraints that have the real potential of driving the potential for negative returns for investors, and flipping that around and creating a much more open and flexible structure that people can come in and out of as they decide what return characteristics they're trying to generate.
I mean, it's quite revolutionary what you're doing then, really providing broad real estate investments through cryptocurrency. So if I take a step back, what do you think that maybe the impact of this will be on the private equity real estate industry specifically?
Yeah, I mean, look, I believe that we're at the leading edge of helping to transform how private equity investment funds are structured, and helping to maximize their performance for investors. And I believe that that's broader than private equity real estate. We are a segment of the private equity industry, but when you look at corporate private equity as well, growth capital that's provided to companies that are looking to scale operations, et cetera, the structures of those vehicles tend to all be very similar. And so we think that this has broad-reaching implications for private equity at large. And then certainly within our discipline of expertise being real estate, we think that this is the way of the future in terms of how private equity vehicles will be structured. And we think ultimately investors will demand that this type of structure exists, because if you ask most investors today, everyone recognizes the value that real estate can generate in terms of returns and wealth creation. It's been a fantastic performing asset class, especially here in the U.S. And I don't think anyone disputes the power of real estate in creating wealth. The challenge that everyone has with real estate, for the most part, is that it's highly illiquid. And so what we've been able to do with this technology and its application to our business model is to kind of revamp that investment structure and create a more liquid environment for investors to participate in and capture the benefit of real estate investments, but not necessarily be locked up for the same period of time, and then not be forced to harvest those investments at less than ideal times in the market, based on what's going on from a general market condition perspective. So we think it's going to be far-reaching.
Okay, then we talked about structure quite a bit here, but I'm actually curious because I know you're structuring this specific offering as a TAO, correct?
That's correct.
Now, for again the audience, the listener, even though a lot of people here in crypto, can you explain how a TAO differs from a typical ICO that they're probably most are accustomed to hearing about?
Yeah, sure. So I think everyone listening probably has a pretty good grip on what an ICO is. So let's focus more on a TAO. A TAO is a tokenized asset offering. And from our perspective, the main difference between the two is that a TAO is taking an asset, such as a private equity fund or real estate or the like, and tokenizing the ownership of that asset. It's essentially securitizing the asset and offering it to investors for purchase. And what they're purchasing is the actual token. So there are a few kind of key points to think about. First, the token is backed again by an actual asset, in our case, a portfolio of value add and opportunistic U.S. real estate. ICOs, by comparison, typically don't have an asset backing its value, but rather a plan to build one over time. So got an idea, got a piece of technology I want to build. I'm going to build the technology, build the organization, and then I'm going to bring that to market. I'm going to hope there's adoption. I'm going to hope that it's revenue generating, and then we're going to scale the business. And so that's a very different value proposition than having an asset ground the value of the token day one. And so, if you think about the term securitization, it's suggesting exactly what it sounds like, which is the token is structured as a security. So it's not a utility token like many of the ICOs that have come to market to date. And in our case, these tokens are being structured as a security and, will comply with regulatory, the appropriate regulatory bodies, namely the SEC, for our offering. So a second point is that, they're structured as securities. They fall under securities laws and regulations. And we think that's an important component to continue to normalize and help the industry to mature, is by having these well-structured, well-regulated types of offerings. Lastly, TAOs, the tokens themselves represent, an actual ownership or equity interest in the asset. Unlike, many of the ICOs, their tokens represent, again, utility, and it's not an equity stake. So they can use it for things to gain value, gain experiences, but they don't actually own the underlying asset that is being created typically in an ICO. And so, as we look forward to, the balance of 18 and beyond, I think, that with the increased push for appropriate regulation, which we're supportive of, we believe asset-backed tokens structured as securities will become, more of the norm, and we'll see a tapering off of, the more traditional utility-based ICOs.
And with that, there's again, right, the very specific thing that we're talking about here is yours as an asset backed, right? It's going to be run as a security. We'll follow the same, securities laws that occur in the land. With that in mind, though, so people that purchase, that token, can you maybe share a little bit how your organization's revenue model might work then as well? Because it sounds like as a typical security, they would probably partake in some part of that revenue model. So if you can maybe explain that about the organization.
Sure, great. And talked a little bit about it, before in the context of, typically in private equity today, you make an investment and the fund exits, and that's when you capture, most of your economic benefit. So there's a long waiting period. And, what we're trying to do, with our tokens is that essentially, our token holders will experience their economic gain through the token itself. So meaning, again, the buying, holding, and selling of the token. The token, is backed by a portfolio of real estate. So as the net asset value of that portfolio rises, so should the value of the token in the market. We believe that, several premiums, can be priced into the net asset value. So typically, liquidity premiums, access premiums, things like that might get built into the value of the token. But as the fund manager, we're raising capital. We're deploying that capital into, a portfolio of value-added and opportunistic real estate investments. We'll manage those investments on an individual basis, again, focusing on maximizing their value. And as we exit investments, we'll redeploy that capital and associated profits into new investments, and therefore driving and hopefully increasing the net asset value of the portfolio. And because the NAV of the portfolio is highly correlated with the value of the token, because the token is backed by that net asset value, that portfolio of real estate, the token should rise as we increase NAV. And then it's up to the investor to decide when they want to enter and when they want to exit, participating in the value creation that we're trying to achieve with the underlying portfolio.
Okay. Thank you again for that very detailed in description as well. So I really appreciate that. And in regards for the offering itself, it sounds like you've been, again, doing this for quite a while in a traditional sense. What is it that really excites you most about Muirfield Investments, again, even looking into the blockchain space?
Yeah, honestly, all of it. I think we love what we do.
Easy answer. Easy answer is everything.
Yeah, look, we're passionate real estate investors, so we love what we do, every day, which is to manage capital for our investors and generate compelling returns for them. I love the real estate part of it, the physical assets. Watching the capital that we're providing to developers, create apartment complexes or hotels, office buildings, things like that. But I also, love and very excited about, the group of professionals that are consistently looking to, kind of eat their own lunch and drive change in the industry. Being out in front's exciting. Hopefully we won't have too many arrows in our back. But, I wouldn't trade that position for the world. We've met some fantastic people in the blockchain community and to be exposed to their passion and their excitement is really quite remarkable and actually brings me back to, the mid-90s when I started, in tech and in my career. A lot of the same dynamics, a lot of the same passion and excitement for this technology and a lot of uncertainty, which I think is exciting. We're looking forward to becoming, a value-add member of the community and, beyond our initial blockchain initiative, through our bounty programs, we're looking, to make a commitment to be, working with the development community to create additional, blockchain use cases for our industry. We're also going to be allocating a percentage of the capital we raise from our TAO to be invested in other blockchain and crypto initiatives that have the potential to continue to transform the private equity and private equity real estate markets. We believe that being an active participant, within the community and supporting other blockchain and crypto initiatives is a way for us to drive better overall, value for our investors and the community at large. And so, there are a lot of different pieces that are exciting to it, but there really isn't anything that we're not excited about. It's a great time to be trying to do what we're doing. And I think, we're happy with the fact that there's a lot of technological innovation going on and we can just play a small role in helping to kind of push the ball up the hill.
Yeah, I agree. Right. So I'm in a unique position where I speak with, innovative minds like yourself all the time. And the imagination, some of these projects sometimes is fascinating. And the fact that, people are pulling this stuff off and driving change within their respective industries as well is great. But we all know, right, it's not sunshine and rainbows and unicorns. So I really love to get an idea from you as well. Kind of what do you see as, maybe a threat to your organization at this point?
Yeah, it's a great question, one we reflect on frequently. I think at the moment, with this effort to transform, the private equity space, we are out in front, and there are obvious risks associated with being out, in front. And we believe that the risk of not being out in front, advocating for this change, is greater. not only is blockchain fairly new as a technology, but its applications are happening in real time around us, which is exciting. But our specific initiative is somewhat complex for those not familiar with private equity and fund structures. And we're doing our best to educate those folks so that they can effectively evaluate our investment opportunity. But it's a tough mission. It's a large, diverse group of people with global reach. And so we're focused on doing what we can to try to bring them up to speed. But certainly being out in front and the catalyst for change is risky, no matter what the venture is. But again, I believe it's riskier to sit idle and wait for others to determine our fate. So we're happy to be out front, but there's certain risks that come along with that.
Absolutely. I know. Obviously, we're talking a lot about blockchain. Can you maybe discuss what blockchain you guys are building on top of?
Sure. Yeah, and let me preface, what I'm going to say with I'm not a technologist. I'm a
That's fine.
investor, but from my perspective, we're using Ethereum, and so from my perspective, we chose Ethereum because of its widespread adoption in the industry, the robust development community that's supporting it, and really the flexibility and capabilities of the smart contracts. Some of the things that we're doing by way of the smart contracts is pretty cool. And we've seen a lot of flexibility and some real, strong capabilities of, the technology. And so, for those reasons, we settled on Ethereum and are happy that we did so and looking forward to, seeing success with it.
No, absolutely. So I think it's important to make sure when organizations are picking a specific chain they're building on to make sure that chain is going to be around, right? Because it's like building your house on top of sand in a real estate market, I guess you can equate that to. So I just want to make sure that you have a solid foundation as well. But obviously, when you're launching an organization, Tom, right, there's a lot of different competing priorities. You're in the middle of of your launch of your fundraising right now as well. So I'd love to get an idea, because again, some people that listen to this show as well are other entrepreneurs. So how do you prioritize for your kind of your duties during this crazy time right now?
Yeah. It's interesting. I mean, one of the advantages that we have over, some of the, or even many of the traditional ICOs is that we're not launching a new company. We are taking an existing company. So, we're seasoned real estate investors. We've been doing this for a long time, and we're going to continue doing the same thing post, TAO as we do today, which is, focusing on our investors and deploying capital in real estate in a thoughtful and appropriate way, and trying to generate, solid risk-adjusted returns for our investors. And so, that gives us an advantage because we're not starting from scratch, right? We're not trying to build an organization here to try to put a concept into play and see if we can make it work. We're changing certain inefficient and less than ideal structural things about the way our business is operating. And that gives us the ability to kind of continue doing what we do, but hopefully just be doing it in a better way and generating better results and delivering a better product to our investors. So that gives us a huge advantage. However, we are, transforming the way, we work with investors and the types of structures that we, deliver to the marketplace. That does come with a tremendous amount of workload and, ever-changing priorities. And, what we try to do is, our main focus is, again, managing investor capital and generating good returns. And so everything comes back to the investor for us. And so we try to analyze the impact of our decisions and where we prioritize things with, that mission in mind, which is how does what we're doing affect our investors? And if we keep that focus, we've found that, not only with this initiative, but other initiatives in the past, that allows us to kind of appropriately prioritize our efforts. So not losing sight of what the end goal is and who you're trying to create value for by doing what you're doing. We're here to serve our investors, and as long as we stay true to that, I think we can manage through, any dynamic, nature that this process presents. And, I guess all that being said, it's still crazy, and we're working around the clock, and that doesn't change with any type of, big push to make a meaningful, change in an industry. So, we're working hard and trying to stay focused on delivering value to our investors, and excited about the opportunities that we see ahead of us as a firm, and also that we see ahead of us in the context of our industry and what we think it can look like long term.
Yeah, I think you made a great couple of points there, right? So for people to remember, it's a existing stable organization that you're really kind of pushing the boundaries of the industry with the layering in of blockchain technology and the ability to actually have a tokenized asset within that private equity world of yours. So very interesting stuff. Again, so great to have you on the show today. Again, Tom, for the best way for our listeners to learn more about Muirfield or even participate in your TAO, how can they kind of learn more about you guys?
Yeah, so a couple things. Thank you for having me, Matt. It was a pleasure, and look forward to hopefully the next time we can chat. As far as getting in touch with us and learning more about us, we're on most of the major social media channels. You can visit our website at www.muirfieldip.com, and we're always happy to hear from folks via email as well, and they can reach us at info@muirfieldip.com, and we promise to be responsive. So thanks again, and hopefully we'll have an opportunity to chat again in the not too distant future.
Absolutely, and definitely, good luck with the TAO. Looking to see big things from you guys in the news here coming up soon. So should be great. Again, pleasure to have you on.
Thanks so much.
Thanks for tuning in to the Crypto on the Block radio show with Matthew Loughran. Please subscribe, like, share, and comment. Tune in next time.